go to SchiffGold this weekend, as I've been saying, and get yourself some gold before it's above 5,000. Silver, look, yeah, I mean, it may go back below. It's hard to say it'll never go below 100 again. I mean, it's only 102.5. But again, I was saying the same thing at 80, 70, 60. I mean, I didn't have that much time to say it at 60 or 70 because it didn't stay there that long. I mean, I was talking about it at 30 and 40. You had plenty of time to buy $30 silver and $40 silver. In fact, you had years to buy $20 to $30 silver. Right? I was trying to get people to buy it because I knew this was going to happen. I just didn't know when. And it is not over. It's just getting started.
The window to secure precious metals before the following significant psychological barriers are breached is rapidly closing. With gold poised to surpass $5,000 and silver already holding support above $102.50, the market has fundamentally shifted away from the decade-long consolidation. Investors who hesitated during the prolonged period of $20 and $30 silver have missed the accumulation zone, as the asset class has surged through the $60 and $70 levels with immense momentum. Peter Schiff, chief economist and founder of SchiffGold, emphasizes that this rally is far from over. He argues that despite the rapid ascent, we are just getting started on a trajectory driven by inevitable currency debasement. Schiff notes that while short-term fluctuations are possible, the days of cheap metal are likely gone forever, and waiting for lower prices is now a strategy fraught with the risk of total exclusion. Now, we present the clips from Peter Schiff's interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you, and enjoy the video.
We're headed for a crisis. Worse than 2008 for America, right? The 2008 crisis is called the global financial crisis, right? This crisis that's coming is not going to be global. It's going to be American. Now, the '08 financial crisis was made in America, right? But the problem was we had exported all of our bad mortgages all around the world. So when the mortgages went bad, foreign creditors that owned those mortgages also had losses. But what created more problems for the global economy was that when the financial crisis hit, the dollar was at an all-time record low, and it had a big rise. And that rising dollar, right, was a big problem for the rest of the world. This is going to be the opposite of that. This crisis is a dollar crisis, and it's hitting when the dollar is relatively high and has a long way to drop. Now, it's already dropped against the Swiss franc, but if you look at a lot of other currencies, the dollar is still high compared to where it was in 2008. And as the dollar falls, that's going to be a big positive for the rest of the world. Meanwhile, the bonds that are going to be crashing now are treasuries, and there isn't default risk there. See, there was default risk in mortgage bonds. There isn't really going to be default risk in treasury bonds. There's just going to be inflation risk. And so foreign central banks and foreign holders of our currency are just going to sell these bonds. The Fed's going to buy them if nobody else wants to. And if the bonds mature, well, they get their dollars. They get paid, right? The government's going to pay. And then they take those dollars and they're going to sell them into the market. And so this is a U.S. financial crisis. For the rest of the world, there's going to be a boom. It's going to be a bust in America and a boom, particularly in the BRIC nations, the emerging market economies that have been shouldering the lion's share of the burden of supporting the U.S. consumer, right? They're going to be relieved of that burden. They're going to see the value of their savings and their paychecks go way up, which means the cost of all the goods that they buy are going to go way down, and consumption is going to go way up outside the United States as it implodes. A lot of people, when I talk about how we're going to have this massive recession, depression, and rising prices, they don't understand how that's possible because they'll think, well, if demand is so low, how can prices go up? And my response is because demand is not going to be low all over the world. Demand is going to go up in other countries, right? It's going to go down here because as the dollar tanks and foreign currencies rise, right, prices go down in other countries. Things get cheaper. And so demand goes up, right? You demand more when the price is lower. And so people outside the United States are going to consume a lot more. So that means there's going to be a lot less available for Americans, right? We're not going to be importing as much stuff because it's going to be too expensive. So yes, Americans are going to buy a lot less stuff, but the stuff they do buy is going to cost a lot more, right? And so you can still have a lot of unemployed people, a weak economy, but everything you want to buy is very expensive because you're competing with people all around the world who are now richer because you're poor. Your purchasing power that you lost was gained by somebody else.
The impending economic crisis is poised to eclipse the severity of 2008, manifesting not as a global contagion, but as a localized American dollar collapse. Unlike previous downturns, where the greenback rallied, this scenario involves a devastating devaluation that will paradoxically fuel a boom in emerging markets and BRICS nations. As foreign creditors dump U.S. treasuries to escape inflation risk, the immense burden of supporting American consumption will lift, causing purchasing power to shift violently across borders. This wealth transfer means citizens abroad will see their currencies strengthen and consumption rise, while Americans face a depression characterized by soaring costs and scarcity. Ultimately, the domestic economy will suffer from stagflation, where falling local demand fails to lower prices because wealthier global competitors are absorbing the supply. Let's get back to the interview.
What's happening in gold and silver is real. This week should let you know that it's real. And so I'm not just talking, I'm not just gloom and doom. It's not just pessimism porn. This is reality. And you can't, if you haven't been, acting on what I'm saying, don't wait anymore. Don't think you're going to be cute here and I'm going to buy this pullback. You have got to get out while you can before more people want to get out and it becomes a stampede. All of this is going to build on itself, right? How did you go bankrupt? Well, slowly at first and then all at once, right? So it's going to speed up the rate of the collapse until it becomes, it's orderly until it's disorderly. So you've got to get out ahead of this and recognize what most people will not recognize. They will not figure this out until after the fact, until it's too late. It's not too late now. Yes, it would have been better if you acted last week, last month, last year, 2 years ago. Okay, I tried my best, right? But you know what? It's still better. It's still better to do it now, right? Than to go down with this ship. So go to SchiffGold this weekend, as I've been saying, and get yourself some gold before it's above 5,000. Silver, look, it may go back below. It's hard to say it'll never go below 100 again. It's only 102.5. But again, I was saying the same thing at 80, 70, 60. I didn't have that much time to say it at 60 or 70 because it didn't stay there that long. I was talking about it at 30 and 40. You had plenty of time to buy $30 silver and $40 silver. In fact, you had years to buy $20 to $30 silver. Right? I was trying to get people to buy it because I knew this was going to happen. I just didn't know when. And it is not over. It's just getting started. And if you really want to make serious money and you're willing to take extra risk, look at these gold mining stocks. Look at these silver mining stocks. They are still incredible bargains despite doubling and tripling or quadrupling because they started from ridiculously low levels and they haven't gained nearly as much as their earnings. So the stocks are cheaper on a PE basis, but not only that, their future earnings are going to grow even more because gold and silver prices are not going to stop going up. They're going to keep rising. You got to get out of U.S. stocks. You got to get out of U.S. bonds, right? And the U.S. dollar. So go to Europac.com too, not just buying gold and silver from SchiffGold because you don't want to have all your money in gold and silver. We buy a lot of dividend-paying foreign stocks, and all these dividends are coming in foreign currencies that I believe are going to dramatically appreciate against the dollar. So that means when you repatriate these dividends to spend them here, every time you get a dividend, it buys you more because you get more dollars because the dollars have gone down. You have real assets, right? We're not buying, speculative, high multiple stocks, good value, and we're buying businesses that provide services and that sell products that people need. So we have pricing power because you need that in an inflationary environment because what happens when people get squeezed, they stop buying the things they want so they can keep buying the things that they need. So most of the companies that we own aren't selling what people want, but what people need, right? Because that's where you've got the power. But where we are invested in what people want is where the revenue is coming from, the emerging markets, because that's where the new discretionary income is going to be. The buying power that Americans lose is going to be gained there. So you just have to have the right type of portfolio. And we have been building these portfolios for years at Euro Pacific Asset Management, because what is happening now, and more importantly, what is about to happen, is exactly what we've been positioning for more than a decade. Because I saw this train wreck coming from a mile away. And just because I saw it early doesn't mean I was wrong. It just means I understand it that well and I can see it that far in advance.
The current market volatility is not mere pessimism, but the onset of a disorderly dollar collapse that will occur slowly at first, then all at once. Investors are urged to exit U.S. assets immediately before the stampede begins, as waiting for a pullback in a vertically rising market is a strategy for failure. Leading global strategists actively warn that despite recent highs, the bull market in mining stocks is merely beginning. They argue that these equities remain incredible bargains on a price-to-earnings basis, poised to grow even cheaper as metal prices climb. The optimal strategy involves aggressively accumulating miners while simultaneously pivoting toward foreign dividend-paying stocks to escape the dollar's devaluation. This approach capitalizes on a historic wealth transfer to emerging markets. As American purchasing power collapses, the wants will be consumed by the BRICS nations, while domestic consumers struggle to afford needs, making foreign income streams essential for survival. Share your thoughts on his analysis in the comment section below. If you find this video informative, please support us by turning on notifications to stay informed about our latest videos. See you in the following video. Thanks for watching.